Hey Ryan, how are you?
Good to see you, Nicholas. I'm doing well. Long time no talk.
Yeah, long time no talk. It's been a while.
Been
Uh,
well, yeah.
at EquitiesTracker, we've been quite busy actually, dealing with a few stuff. How about
Yeah.
yourself?
I've been good. It's been obviously very eventful here at Santiment. Lots of things that we've been keeping track of. Markets, at least crypto wise, haven't actually been too bad over the last 2-3 weeks or so, even though, they're still trailing behind equities and gold for the long term. But yeah, I mean, there's definitely a lot with that has been going on.
Yeah. By the way, I saw that Santiment is up for a reward. Is it?
Yeah, our Hedge Week Awards. We got 6
Yes.
different nominations. I appreciate you pointing that out. We're very
Congratulations.
excited about it.
Nice. So let's begin today's recording. Okay, hi everyone. Today is the Friday, 12th of March. I'm Nick from EquitiesTracker, and I'm speaking with Brian from Santiment.
Hey guys.
So the past 3 weeks has been quite volatile and quite good. I see some Bitcoin prices started to move, but it couldn't move, then it start falling back again. So what happens?
Yeah, I mean, there's been quite a bit of eventful news, to say the least, with the conflict that, it seems split. Some people call it a conflict, other people call it a war. But it's drastically changed the course for the way Bitcoin has gone versus the way stocks have gone. You can see here on my screen, especially over the past 5 weeks or so, the S&P 500, ever since this crash right here, if I just drag from right here, the S&P 500 is down about 2.2%, while Bitcoin is up 2.4%, and gold is up 3.7%. So that's actually, it may not sound like much, but it's a pretty big change from what we have been seeing ever since that crash from the all-time high that happened back on October 5th or 6th, depending on your time zone, where Bitcoin has just taken a huge beating, losing over half of its market cap. The S&P and gold kept rising and rising. And through this conflict going on, which goes beyond our normal coverage, hearts go out to anyone that's been impacted by this war, of course. But from a raw data perspective, we do see that there's been a bit of a turning point in regard to how crypto is behaving. And it seems to be performing better during this time of uncertainty than the previous 5 months of uncertainty with all the other things going on. Meanwhile, equities is going down. So there's kind of a correlation break between the two sectors at the moment that we've been fascinated to watch.
So you mean that the conflict in the U.S., the Iran is actually creating some kind of correlation in between them?
It's creating less of a correlation. From what I've seen, when there are major events, going all the way back to the FTX collapse, which was very crypto specific, of course, that's when there is less of a correlation between the two sectors. And then when things become relatively more calm, that's where you see the S&P and Bitcoin's price stay much more in line with each other. So if I go back 4 years, just to illustrate this, let's try that one more time. There we go. So you can see how Bitcoin has stayed mostly in line with what the S&P has done. And then all of a sudden, right after the all-time high, that's where we saw this big split where Bitcoin crashed all the way down. It went down, 38, 42, 43%. I know at one point it was actually more than half of its market cap gone. While the S&P has gone up 2.5% over these 5 months, gold has gone on a huge surge, but all of a sudden you see the switch where the S&P is starting to move down, Bitcoin is moving up.
Oh.
And that's right around when the war talks started to really get big, right after this crash.
Oh. So is there a reason behind that decoupling from the S&P 500?
Well, from a zoomed out perspective, if you look at stock performances and why they go up and down, it's based on capitalism being stable and staying successful and inflation not being impacted. And then when, we had the Supreme Court ruling last month where they ruled that Trump's tariffs were illegal, and then Trump implemented 15% global tariffs anyways, that created a lot of chaos and confusion. And in general, it looks like there is less confidence from investors that the country feels safe, whereas Bitcoin is not specific to the US. It's largely driven by the US, arguably more than any other country outside of maybe China. There's an argument there too. But Bitcoin is able to kind of carve its own path regardless of geopolitics at times. And since this war, at least right now, only involves 3 countries, Bitcoin is able to kind of regress to its mean, move based on what institutional traders are doing, and move less on whatever the latest words that Iran's or Israel's or the US's leadership is saying at any given time.
Oh, so you are saying that the war between Iran and US and Israel is currently not affecting crypto market as much as it looks?
Well, as it's not affecting it as much as global equities, that's for sure. I think equities are definitely being impacted more. I wouldn't say that crypto isn't sensitive to it. It's of course a very big deal, especially 3 powerful countries being involved in this conflict. That's pretty unprecedented. But it's, I guess, long story short, the correlation seems to be breaking and favoring crypto, whether it's because crypto has already taken such a beating prior to this conflict, or whether it's because there's just less sensitivity overall, or there's, kind of like gold, there's more interest in buying alternative assets. Gold, of course, is a physical asset that people believe is always going to have value. Bitcoin's a little bit different, but it's of course been referred to as the digital gold. So people will hedge more and get more into an asset that isn't specifically valued based on one country's success. So like the S&P is going to be more dictated by, to an extent, how well the dollar can do and things like that. Bitcoin doesn't care how the dollar is doing. Bitcoin cares about Bitcoin and what the crowd and the overall institutional money believes it is worth. So that's how I see it.
Sounds like Bitcoin cryptocurrency is carving a new path on its own.
Yeah, absolutely. And we can see here on the screener here, there's quite a variation between different assets over the past week. So we're looking at the 7-day price changes, Bitcoin being up just under 1%, Ethereum up 2.5%. Dogecoin had a pretty big week, up about 3.5%. You can see Stellar, Avalanche, Sui had a pretty good week. Sky, the best performing asset of the top 50 or so market caps. Internet Computer right there as well. And then you continue to see, privacy coins take a beating with Zcash declining more. Toncoin has dropped. Canton has dropped after a really good performance in February. So it's very spread out. So altcoins aren't all just following in the steps of Bitcoin, the way that they have for much of the last 5 months.
Wow. So naturally, I think someone would ask in this situation is Bitcoin actually bottoming out?
Yeah, I mean, that's the trillion-dollar question, right?
Yeah.
If we could confidently say this was the bottom, it would be easy. So much of it is still going to be dictated by things like the conflict ending, things like institutional money buying or selling, MVRV. Are people FOMOing in right now and still trying to buy any dip possible? The crowd, that is, the retail traders. We can take a look at some metrics here and kind of investigate. There's a lot of differences between sectors, of course. Meme coins actually were one of the biggest beneficiaries, up 3.5% overall amongst the top 50 that are in our watch list. Meanwhile, DeFi and real world assets took a very large hit and they've dropped a lot. And then you can see privacy coins down quite a bit, AI agents, things like that.
That's surprising for real world assets, no? Because recently I've seen a lot of news that they were talking about tokenization and stablecoin being issued. I thought real world asset would go up.
I agree. And, I made this watch list about a year ago. It was the top 47 at the time. I doubt, those top assets have shifted around too much. But it seems as though, at least at the top level, prices look pretty good. And then if we add like the last 30 days here, and we just go by like the biggest gainers and the biggest losers. Yeah, there's some that have done really well. Defactor has more than doubled, Swarm, a lot of these very obscure market caps that are outside the top 500. Maker is the most notably well-known one that's up 18%. That's done very well. But then we can go down a little ways and we see several losers that are kind of bringing down the average. Bricken, Horizontal, trying to see if there's any notable ones we might know. Maple is pretty high. Sinfin, these are ones that have declined pretty significantly. Quant has dropped. So yeah, there are some real world assets that are struggling quite a bit. Algo right here at 99th is down just barely over the past month, but yeah, it's really all over the place.
Yep.
But what I really wanted to point out, you make sure, that's the current data because the current day isn't quite done, but we should see probably in the next hour or two for those who are on a trial or using Sandbase Pro or Max. The 10 to 10K BTC line has actually moved up pretty significantly in the past 2 weeks. This green line represents those key stakeholders that make up a little over 2/3 of all of the supply of Bitcoin. And they're finally starting to accumulate. You can see how much they were dumping ever since mid-January. And these bars here are the daily close prices. And you can see how price dropped as this green line dropped. They had a little bit of accumulation, giving people a little bit of hope. And then they dumped really significantly here again. And then they finally started to accumulate about 2 weeks ago. And this is a very good sign. Now, what would be an amazing sign is if this red line here, representing the very small wallets that hold 0.01 Bitcoin or less, if they start to drop because the retail crowd has finally decided that crypto's dead or they've had enough and they're ready to abandon their portfolios, that's a great sign that whales and sharks can basically accumulate heavily with very little resistance. And that's when prices typically rise and we see all-time highs. Looking back at the last year, you can see just how correlated the bright green line has been, these key stakeholders, along with the price of Bitcoin. And if you react fast enough, you can see a big accumulation from them. A couple days before, you get a big jump in price. But as far as signals go, others at Santiment may have a different answer, and that's okay. But for me, this is right up there as a top 2 metric for me, looking at what the whales are doing versus what the retails are doing.
So the retails are still pretty bullish at this moment, yeah?
Yeah, it's somewhat surprising. But it seems like the retail traders are still trying to buy any dip that they can, thinking that they're buying bottoms right now. And ideally, we don't see that. We see them starting to give up, kind of like they did in late August here, where they started to dump. And then all of a sudden we saw an all-time high in the beginning of October. And even right here, look at how much they were dumping right after Trump announced the tariffs, if you remember, last April. And then we see just significant declines by the retail holders. And during that time, from the bottom, Bitcoin jumped almost 50% or so while the retail traders were dumping. And then the retail traders finally decided, all right, now we're going to start accumulating. And that's when Bitcoin started to go down. So the red line is a really good counter indicator to where prices typically go next, which is why my biggest concern here, and the reason why I can't just say Santiment's data is showing nothing but bullish signals ahead, is because retail is still so aggressive and bullish themselves.
That's actually very surprising, because the fear now is so strong, especially with the war and the Supreme Court's ruling and all these things. And that's just surprising.
Yeah, it's super surprising. And, we have other ways we can measure the crowd's mood. And one thing we like to do, you'll notice this far spike right here. We can look at the ratio of comments across social media. When it comes to our algorithm, we can measure whether a comment is positive or negative in regards to Bitcoin. So we're taking all of these green bars on a daily basis and dividing them by the red bars, positive divided by negative. And that's how we get this gold line. And this is the very beginning of a new market day. I think it just probably started in the past 30 to 60 minutes. Overwhelmingly positive, over twice the amount of bullish comments right now compared to bearish. And that is more than we've seen all year long. Now, I expect this will come down a little bit because it's such a short sample size. It's just like less than an hour's worth of data coming in on Friday. But you can see just in the past, 5 days, even leading up to it, the crowd was getting more and more bullish. And yesterday, Thursday, was actually the most bullish the crowd had been since January 27th. So it's about a 6-week high in terms of positive sentiment right now, despite all of this uncertainty going on with war. So in a way, it's actually, we're not rooting for good or bad news. But I think uncertainty tends to be the most difficult ingredient, because we're getting so much news coming from social media on who's winning the war, whether there even is a war, airstrikes on this region of the world, but was it AI created? Like, there's so much misinformation right now. And of course, I'm sure there are some valuable news sources that some of you follow that you can trust, and we trust as well. I'm not going to give suggestions, but I know they're out there. And I think with all the uncertainty, it's creating this weird higher level of confidence that crypto can thrive through this time of war, depending on what you're rooting for. So people who are thinking the war is going to end soon, they're confident because they think that will lead to Bitcoin being bullish. People who think the war is ongoing and either Iran or Israel or the US are going to get a lesson in some way, they're rooting for whoever they're rooting for. But until we get like some objective details that a ceasefire is happening or something like that, you're going to get all of this weird data where some people are very bullish toward crypto right now, when the reality is maybe they should be or should not be. We don't know. What's very striking, though, is just how much bullishness is coming in so far on Friday, even in a short sample size.
Wow, that's really something new. Yeah,
I think so too. So, it might be just part of it is the fact that crypto is outperforming equities for the first time in a long time. I'll hide gold for a minute, but like just people being able to see this for once, seeing like, here, I'll go right from the crash. People actually seeing that Bitcoin is moving up versus equities moving down. That's such a rare phenomenon over the past 5 months that maybe that's causing some of the confidence that we're now seeing across social media.
Yeah.
Look, even since I clicked away, now it's showing it's a lot lower. It's not crazy anymore.
Yeah.
But you can tell it's still much more bullish than average.
Yeah, there's a trend upwards on the positive negative sentiment.
Yeah. And you can see the last time we got this bullish, it did lead to a local top. So I do want to warn that the higher the sentiment goes, the more likely we see some sort of bull trap or bearish turnaround. Just like the other end, when you see super bearish sentiment, like you did at the beginning of February, that's when you start to see a bounce and prices move back up.
Yep.
Other metrics, I'm continuing to watch the on-chain activity for Bitcoin, and it's still showing the transaction volume is moving down overall. And it's kind of being matched in terms of like the overall address activity and network growth. You can see the trend lines for daily active addresses versus the amount of new wallets being created. And they're just continuing to trickle down over time, which is, of course, worrisome. We don't want to see less and less utility over time. But at the same time, we can still see things like the total amount of holders steadily moving up. Even though there's less and less network growth right now, there's still more amounts of non-empty wallets on the Bitcoin network than there's ever been in history. So next time you see someone who says Bitcoin's dead or crypto is collapsing, remind them that there is now a record 58.59 million wallets that have at least some semblance of Bitcoin in them. And you might say, oh, well, it's a bunch of tiny wallets. Well, that's not the case either. I just put out an insight a couple hours ago. Oh, I know why. One moment. I'll just pull up the link. It was because it was a repost, not an actual insights post. One moment. Here we go. So our data is showing that in terms of the amount of wallets that hold at least 100 Bitcoin, there's now 20,031 BTC. So it just crossed the 20,000 mark for the first time in history. We're looking at the all-time data for Bitcoin. And there's more 100 plus Bitcoin wallets now than there's ever been. Wow. Now, it's easier to hold a wallet with 100 Bitcoin now than 5 months ago, because we're almost something like, 40% below the all-time high. But it still shows that, compared to what the network was looking like a decade ago, when the price was something like, 1,000 to 3,000, we're clearly seeing a lot more whales and sharks out there than there's ever been.
Oh. Wow.
Some of them could be liquidity providers, whatnot, but you get the idea. Sorry, go ahead.
That can be actually quite good for the chain, right? For Bitcoin chain.
Yeah. I agree, because again, what we're rooting for is for this green line. Whoops, if I can find it. Sorry, I'm so all over the place with my charts here. Just go back to it this way. So what we're rooting for is for this green line to keep going up, because that's largely going to be comprised of wallets with 10 to 10,000 BTC. That's what the line is defined as. So 100 or more Bitcoin wallets, that of course includes like the ultra, mega Kraken wallets, whatever you want to call them, that are there for exchanges or liquidity. But regardless, the more of those wallets that exist, the more likely this green line is going to go up over time.
What about the wallets between 10 to 100,000?
Yeah, good question. You said 10 to 100,000?
No, sorry. 10,000 to 100,000.
Okay. Yeah. I mean, the reason we cap it at 10,000 is because based on our best guesstimation and we've studied what a lot of 10,000 plus BTC wallets are most likely consisting of. There's too much unreliability with their fluctuations and where prices go next. So I've personally done quite a few different experiments with, doing some R-squared studies and things like that to see how much true correlation each group of Bitcoin wallets have. And by far, the best results that I saw was when I saw 10 to 10,000. And when you start to go beyond that, like 10,000 to 100,000, like if you just compare this yellow line with the price of Bitcoin, it has almost no correlation whatsoever. Because in our opinions, they're mostly going to be comprised of, Satoshi type wallets that don't really move, or like liquidity providers that go up and down based on demand. And these aren't going to really give us a true indication of where Bitcoin is going to go next.
That makes sense.
And then, 100,000 or above, I think there's only, if we looked at how many of those exist, there's so few. There's 4. Yeah. So there's 4 that are over 100,000. And then there's about 84 that are between 10,000 to 100,000. So we're not excluding much. We're really only excluding, we're only excluding about 86 wallets when it comes to the green line up here.
Yep.
But yeah, great question. And then moving back to a few other on-chain metrics, we can get here again. Okay, yeah, MVRV is a very important one to always keep an eye on. The 30-day performance of the average wallets out there. So any wallet that's been active in the past 30 days, they're actually up because Bitcoin has recovered pretty significantly since the February 5th crash here. So the average wallet's up about 4.7%. Meanwhile, the average wallet that's been active in the past year, a much longer time scale, they're still down 25%. And if we go back a full year, that might be a little surprising because Bitcoin's price was actually higher. It was in the 80Ks 1 year ago compared to now. But so many people have been trying to buy these dips after the all-time high that it's caused the 365-day MVRV to move down and down and down because people buy the dip in when they shouldn't. And there's a lot of FOMO and FUD that's going on all the time that makes them perform much worse than someone who would just hodl, and they'd still be plus 10 to 12% if they just held their Bitcoin for the last year. But what that means is that wallets that have been active long-term are significantly in the red, meaning you could buy now with much less mathematical risk than the average point when you're at the zero-sum line here. So anytime you're buying for the plan of holding long-term and the MVRV is already well into the negative, you're buying while others are in pain. Whereas up here, if you were to buy here, you'd be buying with a much more risky consequence because others are already in such deep profit, if that makes sense.
Yeah. So now it's looking at the long-term MVRV. It's telling us that if someone wanted to hold this for long-term, now this would be a less risky time to get it.
Exactly. Now, short term, you could still be in for some rocky, unpredictable waters because it's showing that the swing traders are actually up money on average right now. So there's some risk, especially, the last time we saw these big jumps above 8 to 10%, that's when prices typically dropped. You could see it here. Prices dropped here. They dropped here, they dropped here, and they dropped here as well. And now we're starting to climb again. So I'm a little iffy on the short term, but the long term, if you can stay patient, and of course, global economics are going to factor in here, but the math says that it's justified where you can make a long-term investment and feel pretty good about your timing.
That's great.
Oh, and I definitely want to show you funding rate. Let me do that last. I just want to go down and also show, look how inactive the whales have been here. All of a sudden, there's very, very little activity among $1 million or more wallets. If you see the far right of my screen here.
Yep.
So I'll just hide that for a moment. Like this just took a huge tank right here on March 7th, pretty much ever since the conflict really started to ramp up and you started to see airstrike videos and whatnot and serious declarations from both sides. That's when whales stopped really moving. It's a little more normal on the 100K plus side, but it's pretty clear that whales are much less active. And that doesn't mean they're dumping. It just means they're sitting on their coins more than usual because they're so uncertain about what's ahead.
So in a way that the war is giving more uncertainty towards the whales than the retails.
Yeah, I mean, I would say both the retails and the whales are uncertain. The retails have less to risk if they're buying the dip by adding an extra, $20 every time the dip goes down 1%. Maybe it just doesn't matter to them as much. But if we don't have data to show how active the retail traders are. I guess to an extent, you could use this line because most active addresses are comprised of small retail addresses, and they're definitely moving down too. It's just that when retail traders are making decisions, it seems to be more accumulation than dumping, whereas the whales are more just sitting and not making as many decisions at all in either direction. So they're hodling more, whereas retail slows a slight bias toward buying.
So there's a lot of online talk about whales having to wait and see. So this is kind of telling us that.
It seems to be confirmation of that, for sure. I mean, I actually should write a post about this, but March 7th is the lowest amount of $1 million or more transactions we've seen since, got to go back a long time. I'll have to check with the team just to make sure it wasn't an anomaly, but yeah, it looks like the last time was October 2024 or so.
Wow. So
we're looking at about a 1.5 year low in whale activity. But to be fair, look what happened to price during that time. We had a low in whale activity and then it just surged.
Wow.
So what I'm trying to say is less whale activity certainly does not mean we're going down. It just means they're holding and waiting.
Yep.
Even here, I mean, look how low they were right after the FTX collapse because everyone was waiting to see what would happen with the Sam Bankman-Fried situation and what would happen to the crypto markets as a whole when they went down below $16,000, or Bitcoin, that is. And then all of a sudden we get a generational, I'm exaggerating, I guess I should say a once every 5 years opportunity to buy a dip.
Wow. That looks like history is repeating itself.
I mean, it's hard to say. A war is a lot different than a major collapse in an exchange.
Yeah.
But there certainly can be some similarities like, what was I going to show? Oh yeah, MVRV, for example, is a good example where the last time we saw the long-term MVRV this low was that FTX collapse. So this is where MVRV is now, like negative 25%. It actually got as low as negative 32. The last time we saw a negative 32 was right there, December of 2022, like a month after the FTX collapse.
Yep.
So that's a definite similarity.
Yep.
Doesn't mean we're going to see a generational or once every 5 years buy dip opportunity, at least not yet, but it implies that it has some argument to go that direction for sure. And the other thing I wanted to show would be the aggregated funding rates. And maybe this can be our last topic. But we are seeing significant shorts right now. And that's a good sign. So even though we're seeing a lot of retail accumulation at the moment and a little bit of a bullish bias, even with the war going on, look at the average funding rates. So the shorts are essentially paying longs right now across most exchanges in order to bet against the price of Bitcoin. And the longer this goes on, the more liquidations can occur from those shorts that are basically going to add rocket fuel to propel Bitcoin and all of crypto to jump up. And that's a very good argument. It doesn't mean this shorting is going to last forever, but most of the time when we see aggressive shorting, it means that there is less risk in buying in at that time.
So there's a lot of indicators showing that actually this might be a less risky time to get in.
Yeah, I would agree with that. I'm not going to go out on a limb and say you better buy now. We don't give investment advice anyways, but according to the data, it's matching some other historical times that indicate, that we can start to get in better shape in terms of market prices soon. The big elephant in the room, something I haven't even brought up, is the MicroStrategy situation and how much of Bitcoin's overall supply is being hoarded by one company led by Michael Saylor. And he's a very polarizing figure for obvious reasons. He's just continuing to accumulate what seems to be thousands of Bitcoin every single week. And there's only so much Bitcoin to go around. So, of course, if anything happens to that company, we see something pretty unprecedented and not in a good way for Bitcoin. So there's always the risk of one company or one individual that runs the company making a decision that changes the whole horizon of the sector.
Just wanting to know the status of Ethereum, because Ethereum has been there's a lot of activity on Ethereum, but we don't see the price move. So I'm just wondering why.
Yeah, it's a good point. I mean, it's mostly just following what Bitcoin's doing lately. It hasn't really had any big breakouts in quite some time. The funding rate is actually slightly positive right now. If you see that tiny little green bar, I'll just zoom in. Oh, like it just turned green in the last 8 hours. That's very interesting. But yeah, it does appear that the funding rate isn't as short as Bitcoin, which is unfortunate. We'd actually want to see stuff like this, which would propel Ethereum to go way up. And then looking at some of the main metrics, well, let's look at the sentiment first. Yeah, Ethereum's is pretty high right now also. That's probably an anomaly. I wouldn't worry about that. But just going into today, you could tell it's already been climbing up just the same way Bitcoin has been. So not a lot of fear the way we saw in early February for Ethereum. And then in terms of overall utility, it's continuing to move down. There was a pretty big rise in early February, but it immediately started to fall back down for network growth and active addresses. And then MVRV looks mostly the same, just under 6% for the 30-day and minus 30% for the 365-day. So long-term, it's a very similar bet to Bitcoin. You'd be doing it with much less risk than usual if you timed it right now. Whale transactions staying pretty low. This is the current day, so ignore that. It's still compiling data. Lots of profit transactions happening today, which is interesting. So that is a sign that we could potentially see a bit of a top You can see most of these big spikes, prices move down right afterwards, make it a different color so it's easier to see. So yeah, whenever you see spikes like this, you can see prices do tend to go down the next couple of days. So watch for this. Mostly realized losses surmounting, not a lot of realized profits going on. Supply and exchanges staying pretty low. Not a lot of volume, social volume or social dominance related to it. RSI is slightly above 50. And it does lead all of crypto with 183.6 million non-empty wallets. So a lot of, I think staking and DeFi has a lot to do with that. People are just kind of trying to continue to hold and make some passive income while Ethereum stays pretty dormant in price.
Yeah. So Ethereum is still kind of coupling with Bitcoin in a way.
Yep. It does seem that way.
Oh, all right. So is that all the updates for today?
I think so. Yeah. I mean, we wanted to kind of get between 40 to 45 minutes, not make it too long. But as far as our main metrics go, I think we covered the main stories. If we see what like the biggest trending topics are, it's going to be varied between stuff like an Aave swap error, Iran energy tensions. Of course, there's been a lot of stuff related to the war.
Yep.
A lot of nostalgia where people are reminiscing. I saw a big viral post about the 90s and younger people asking us older people what it was like to live during that time. There's usually there's not as much nostalgia if we're living in really good times right now. So people are probably longing for things to get a little bit better soon. And, I think we're all hoping for that. So,
yeah. And I think the most surprising thing for me is that even though now the war is going on and it's uncertain, but the metrics seem to show a positive light.
Yeah, I think for at least the shorter term, because there's been so much pain, there does seem to be a suggestion from the data that we're going to get a regression to the mean and things look a little bit better soon. So it certainly doesn't mean we can't tank. We've got people on our own team that are still quite, concerned about the Michael Saylor situation, and understandably so. Yep. And until that gets a little more clarity and one company isn't hoarding more and more of the overall supply, there can be limited upside, I think, for some people. So even if metrics are showing one thing, you still have to be aware of the big conflict going on around the world and the growing tensions in global economies, the wealth disparities, Michael Saylor, of course. But, I could see what seems to be a suggestion for a short-term relief rally coming up if stars align. So it's a worrisome time for many reasons, but at least Santiment's data gives us some clarity on what seems to be more likely than not for the next couple of weeks.
Yeah. So for all the people looking at this video right now, we can see that despite the uncertainty, everything seems to be growing under the Bitcoin umbrella.
Exactly.
Yeah.
Yeah, everything is especially in times of crisis or a long bear cycle like we've had the past 5 months. Bitcoin is going to be the cue for just about everything right now.
Yeah.
All the other thousands or tens of thousands of altcoins, they need to kind of sit in the back burner until Bitcoin can get some more stability.
Yeah. All right. So I think that's all for we have from Brian today. Thanks so much for all the information, Brian. I'm pretty sure this is a very good video for those who watch today.
I hope so. I hope that I'm somewhat clear with the explanations, and it's probably frustrating that it's not just a simple explanation of whether to buy or sell. Some people just want to know the answers.
Yeah.
We aren't whales. We don't have the answers to where prices will go, unfortunately, but we can make some pretty educated hypotheses, and that's really the best we can do. So really appreciate all of the interest that you guys at EquitiesTracker have in what we're providing, and we always respect all of your wonderful analysis too.
And because Maxim is coming over next week, so we're gonna go more into this.
He has some very interesting insights that are far beyond what I can explain. So I look forward to you guys meeting up with him, and he'll have some fun chats about the markets and the world, and that should be fun. So.
All right. So I think that's all for today. Thank you so much, Brian.
Thank you, Nicholas. Always a pleasure to catch up. I'm glad we could finally do this again.
Yeah, I'm glad too. All right. Thank you. See you later.
Take care.